Hello, everyone. I am your accounts teacher Akanksha. Welcome to our lesson on partnership accounts. Today we will discuss the adjustment for reserves, accumulated profits and losses at the time of reconstitution in partnership accounts. Adjustment for reserves, accumulated profits and losses is done at the time of admission, retirement, death and change in profit-sharing ratio among the partners. What are reserves and accumulated profits? These are basically a portion of profits earned by the partnership firm in the past years. The partners agreed to keep this money in business to make the business stronger. These parts of profits were not distributed among the partners and were kept in the business to meet future business costs. Items included in reserves and accumulated profits are as follows. All kinds of reserves like contingency reserve, general reserve, investment fluctuation reserve, reserve fund, workman compensation reserve or fund, surplus, credit balance in profit and loss account. All the reserves and accumulated profits are written on the liabilities side of the balance sheet. Accumulated losses include debit balance in profit and loss account, deferred revenue expenditure, advertisement expenditure. All the accumulated losses are written on the assets side of the balance sheet. These are also known as fictitious assets. There are two methods for accounting for accumulated profits and accumulated losses. First, where reserves, accumulated profits and losses are not shown in the new balance sheet after reconstitution. Second, where reserves, accumulated profits and losses are shown in the new balance sheet after reconstitution. We will discuss both of these methods one by one. The adjustment for reserves, accumulated profits and accumulated losses will be made in each case of reconstitution. The adjustment will be done whether or not the question asks to do this adjustment. We will start with method 1 where accumulated profits and losses are not shown in the new balance sheet after reconstitution. The accounting for this case is simple. All the accumulated profits and losses will be distributed among the partners as follows. In case of change in profit-sharing ratio, retirement and death of a partner, distributed among all the partners in the old ratio. In case of admission of a new partner, distributed among the old partners in the old ratio. The journal entries for distribution of accumulated profits will be: respective reserve account gets debited and partner's capital account gets credited. Reserve account is debited as there is decrease in reserve which gets debited. The reserves of the firm are decreasing due to distribution among the partners. Partners are getting money, so their capital account is increasing and hence credited. Respective reserve means that if the question gives general reserve, then general reserve account gets debited. If the question gives contingency reserve, then contingency reserve account gets debited. Similarly for other reserves. As explained on the previous slide, either the old partners or all the partners' capital account gets credited, depending upon the type of reconstitution. Workman compensation reserve and investment fluctuation reserve involves different case scenarios and hence are discussed in separate videos. The journal entry for distribution of accumulated losses will be partner capital account debit and respective accumulated loss account credit. Partner capital account decreasing due to share of loss and hence debited. Let's take an example question of admission of a partner to understand this better. Ben, Ren and Zen are partners sharing profits equally. They admitted Len as a new partner for 1/4 share in profits with effect from 1st April. Their balance sheet as on 31st March is as follows. On the liability side we have Ben capital 10,000 rupees. Ren capital 10,000 rupees, Zen capital 10,000 rupees. General reserve 3,600 rupees, contingency reserve 4,500 rupees, reserve fund 900 rupees, sundry creditors 11,000 rupees. Total of liability side is 50,000 rupees. On the asset side we have buildings 15,000 rupees, machinery 16,000 rupees, investments 16,000 rupees, profit and loss account 1,800 rupees, deferred revenue expenditure 1,200 rupees. Total of asset side is 50,000 rupees. Accumulated profits are written on the liabilities side of balance sheet. In this question, accumulated profits are: first, general reserve; second, contingency reserve; third, reserve fund. Accumulated losses are given on the assets side of the balance sheet. In this question, accumulated losses are profit and loss account debit balance and deferred revenue expenditure. First, we will discuss the treatment for accumulated profits. The journal entry will be: General Reserve Account debit by 3,600 rupees. Contingency Reserve Account debit by 4,500 rupees. Reserve Fund Account debit by 900 rupees. Ben Capital Account credit by 3,000 rupees. Ren Capital Account credit by 3,000 rupees. Zen Capital Account credit by 3,000 rupees. Total reserves to be distributed are 9,000 rupees. This gets distributed among old partners in their old profit-sharing ratio of 1:1:1. As the profits are distributed among the partners, so their capital will increase. Increase in capital is credited. Next, we discuss the treatment for accumulated losses. The journal entry will be: Ben Capital Account debit by 1,000 rupees. Ren Capital Account debit by 1,000 rupees. Zen Capital Account debit by 1,000 rupees. Profit and Loss Account credit by 1,800 rupees. Deferred Revenue Expenditure Account credit by 1,200 rupees. Total accumulated losses distributed are 3,000 rupees. This gets distributed among old partners in their old profit-sharing ratio of 1:1:1. As the losses are distributed among the partners, so their capital will decrease. Decrease in capital is debited. Next, we will discuss the treatment in the partner capital account. Distribution of accumulated profits will increase the partner's capital. So it will be shown on the credit side of partner capital account. In the example question, on the credit side of partner capital account, we will write distribution of each reserve separately. By contingency reserve, 1,200 rupees in each partner amount column. By general reserve, 1,500 rupees in each partner amount column. By reserve fund, 300 rupees in each partner amount column. Distribution of accumulated losses will decrease the partner's capital. So it will be shown on the debit side of partner capital account. In the example question, on the debit side of partner capital account, we will write distribution of each accumulated loss separately. To profit and loss account, 600 rupees in each partner column. To deferred revenue expenditure, 400 rupees in each partner column. After making all the entries, we calculated the revised balances in each partner capital account, after taking the impact of distribution of reserves, accumulated profits and losses. The revised balance in each partner capital account, 12,000 rupees. These revised balances will be shown in the new balance sheet after admission of partner. In the new or revised balance sheet, the accumulated profits or accumulated losses will not come. This is due to the fact that we have already distributed all the accumulated profits and losses among the partners. Now nothing is left in the accumulated profits or accumulated losses account. The new balances of partners' capital accounts, as calculated on previous slide, will come in the new balance sheet after the admission of new partner. The new balance sheet after making the adjustment for reserves, accumulated profits and losses will be as follows. Please note that the balance of reserves, accumulated profits and losses are not coming in the new balance sheet. The revised balances of partner capital accounts after making the adjustment are appearing in the new balance sheet. That's all for this video. In this video we have discussed the method where reserves, accumulated profits and losses does not come in the new or revised balance sheet. In the next video, we'll discuss method 2 where reserves, accumulated profits and losses continue to appear in the new balance sheet. Remember, practice is key to mastering these concepts. Good luck with your studies.